Environmental Trading Edge LLC and its members are not broker-dealers or financial advisors. All these webinars are for educational purposes only. All of our indicators and such are for personal use, non-commercial use, and are not to be construed as a solicitation of any products to buy or sell. They are not recommendations, and always talk to a financial advisor for any kind of financial advice. Past performance is not indicative of future results. You can always pause the video if you're looking at the recording right here, or review it on your own time. And we can see where our adjustments were. So let's go to the 6th was our first adjustment here. And since this was last week, I won't go too much into, why we did all this or what and so forth, or just in general. Generally, the market went up pretty strong and aggressive. Our trade plan was that once it hit that 75 area, we'd start stacking on a little bit of negative delta, nothing too aggressive. Of course, we're trying to take care of these really big ranges to the upside because the energy is there in the market, and we had a stretch condition. As far as how we did it, we sold off a call up here to the upside because debit spreads were in play, and so we basically used that debit spread right there to get our adjustment to the upside, just to keep things really nice and simple. We also moved this call back just to keep our ranges in order and our T+0 line taken care of where it was. The market ended up basically going straight down from where we were. We couldn't have timed that any better, honestly. We were up there at about 6%. I thought that we were going to get a pretty solid max gain right away. I was like, wow, it's going to be like 4 days and we're going to hit a max gain and we would start a new trade. But the market decided to have some volatility. We pushed all the way up to about 31 today, I think, didn't we? Or 30.9. So it was a pretty solid vol today. Our next adjustment was on the 7th. Yep. So what we did on this day is we had a decent amount of move to the downside, and all we did here was dump that call. This is one that wasn't that was in between our last meeting as well. So let's kind of talk about this. In general, the way that I did this, I dumped this call and I moved a vert. So let's find our trade. So just to kind of look here, you can see that we've got a call up here to the upside, right? And we've got our regular broken wing butterfly that's down here. I broke this with a debit spread when we originally started out. Now, what I did on this day is I sold off what was really profitable from the day prior to today, right? So that was our first goal, was to take care of that. Once we got to selling off that call, we were able to also, because we needed a little bit more range to the downside. So as you can see here, it's going to be subtle, but basically you can see that we don't have any profitability in here. We don't have anything over max gain. And we were preparing for our trade plan, which our trade plan said that coming up, and then we were going to eventually drop down into these lower levels, right? That was our trade plan. So we wanted to make sure that we had plenty of downside range to the downside, but then also we needed to handle a lot of upside. So we basically pulled this thing apart, right? We sold up here. That gave us a lot of lift to the upside. And then what we did is we used a, you can see here, we used a credit, well, it's a debit spread as far as being on the put side to keep things clean. But if I go up here to a 410, so just to kind of show it here, right? You're going from 5 to 5 right here. I'm splitting those apart. That's the same as this little trade up here. So let me show you this. This is on the call side, right? And you can see that this is a call credit spread, right? So anytime that I say, hey, it's a credit spread, or if it's a call credit spread or a put credit spread, I'm talking about something that's got positive time premium, right? It's a credit. In essence, you're getting extrinsic value credit, right? Now, whether you do it on the call side or you do it on the put side is kind of irrelevant, because technically on the put side, it's a debit spread. if we're keeping our terminology true, but it's still going to behave like a call credit spread because it's a positive time premium trade, right? You have positive theta, you have negative vega, right? If we're going through the Greeks, right? So this is a time premium trade, and so you're running this at a credit. It's basically you're going to get a credit at expiration, versus it's going to be a cost at expiration would be down here, right? So just wanted to clarify what I meant and why I used that the way I did. And that's why I say specifically in the metric, it's OTM or ATM put credit spreads, or ATM or OTM call credit spreads. That's what I mean by that. So if it's on the put side, right, you can still do -5.5. I know that's not the right strike anymore because I moved it. But that's still, you can see that's still a credit spread, right? What I mean by it being a credit spread is that it's going to have positive time premium. So keep that in mind whenever you're looking at the metric and things like that. Let's get back to our trade. All right, so this was a day that was actually mostly above profit target. I know Michelle and I were talking that day, and it was like, well, but I decided to leave this trade on because I was like, I don't know if anyone could fill it because it was kind of being a little bit erratic. This was of course, the bank failure, and so the market was kind of crashing at the end of the day, and it was kind of being nuts. And so I was like, I don't know if anyone could actually get this fill. If we worked it into the market, we probably could, but we just decided, I just said, we'll just leave it. We're in a really great position. We can handle basically anything that the market throws at us, which is ironically pretty much where we are today as well. So you notice it's a pretty solid step. What I did this day, though, is I did drop the rest of these down here. So you can see I dropped the rest of those verts down here. This was all part of our plan. Our plan was, yet again, to trend follow macro pressure to the downside. Trend follow it to the downside, make sure we have plenty of ranges for this downside. We were on track B at this time period. And when we did that, you can see by pulling those fronts, the things that were available were credit spreads. So you can see that that is a credit spread on the call side. But of course, I'm putting it on the debit side because I'm trying to keep this butterfly clean. If you're in Canada, you probably wanted to do it on the call side so you didn't get some sort of weird margin. But anyways, that gets us nice and stable at the end of the day. Plenty of downside range. Very clearly was pretty much above profit target for a large portion of the last bit of that day. And then, of course, we have today, basically get to today, and we had a max gain today and closed it out.